Indeed I do, and Cashbuild saw its full year headline earnings per share fall by 18%, while diluted headline earnings fell 20%. Company CEO Werner de Jager joins us to unpack the numbers. Good to see you, Werner. Although I don't know if you should be so happy to come here with these kind of numbers. They're awful the second half. I did the first half to the second half, down 42%. Second half, first half. What happened?
It was a real tough second half for us. We always knew that it was going to be a tough half for us. We were also up against a very good half on the first half. So margins came under pressure. Our revenue growth was not where it's supposed to be, and we opened a number of new stores, which added cost to the business, and hence we've had some pressure on the numbers.
Dividend down. Final from R2.73 to R1.91. That's a big cut in your dividend. Was it excessive in the past? Yeah. You know, with a company like yours, when you've got such a big dividend cover, high dividend cover, shareholders would hope that in tough times you can cut that cover a little bit and keep the dividend at the same level.
I think we did cut the cover last year to 2 times cover. Now the second half or the final dividend last year were slightly inflated with our 53rd week trading that we had, so it added to the dividend. And that's why, you know, we as a board had a discussion about it yesterday, and we felt that we were going to stick to our policy, our cover, seeing that we brought it down recently to the 2 times cover, and we just stuck to that cover policy.
So you considered keeping the dividend at last year's level?
Yeah, it was a discussion, you know, but Cashbuild being a company that's very policy and that orientated, we decided not to break the rules and keep to our cover that we set for ourselves.
But help us out here. If you're down 42% in the second half on the first half of the year, then looking ahead, things are not terribly bright.
I think no, you know, it's one needs to understand the first half. There's always a bit of a lean towards the first half for Cashbuild because of Christmas trading that happens during that time, where we see quite substantial increases in revenue over that period. So, but certainly not the 42%. When we look at the year ahead, we've managed to turn around some of the volumes. We've been trading up 10%, margins still being under pressure, and we're managing the business. So it's certainly not going to be growth figures that we're expecting, but we certainly are going to be under pressure for the second half or the first half coming.
It's tough for you. You've come into very big shoes. Pat Goldrick, one of the great entrepreneurs of South Africa. Have things changed much at the business since his departure?
I think no, you know, it obviously he's not around, and he hasn't been around for quite a while. We've been on very much the same strategy that we set for ourselves. You know, we were all part of the strategy when Pat was around. We made the strategy, so there were no need, especially for me, to make major changes in terms of the business. My management style is obviously different to his, but in terms of running the business, you know, it's the same process as we've always done.
How different, your management style?
Mine is slightly more participative in terms of that, and I'm expecting the guys to take on that responsibility at lower levels and not to manage the business from the top.
It's been a bit volatile though, if you have a look at your headline earnings. I just went back to 2009, you had a good year. It was down in 2010, down again 2011, up, you shot the lights out in 2012, and now the second half of the year down. Is that really just a sense of the kind of market that you operate in?
Yeah, like, you know, we often say we do make mistakes at Cashbuild, and we do have tough times, but we react fast to correct those mistakes and correct the things that we've seen happening in the market. So our reaction time, we believe, is always very good, and that's why you see, you know, we've been through tough times and we've traded through them, and we've bounced back every time and made sure that we keep, over long term, we keep the graph in a positive trend.
But you used to be spectacular. This was the top company, the best performing company on the stock market. It's not that anymore.
No, we've certainly, you know, we've stepped into a different league in terms of size and our revenues, you know, and in the economy one can't, you know, obviously we start internally and look at these things when things aren't going well, but you have to look at the broader economy and you have to look at consumers. What unsecured lending did for us last year, you can see it in the results. That's gone, and it has an effect on the business. You know, competition in our industry, everybody is climbing into that industry. We can't stop them from coming in. We certainly have our own strategies to deal with that, and you know, so we need to face the circumstances that we're in. competition.
Are you seeing much from Walmart, from Builders Warehouse?
I think at this stage, we understand that there's some changes in terms of models that they're bringing out that will compete directly with us later during the year. So we are aware of those changes that's happening. In terms of transactions and specific deals that they do at a point in time, they are competitive in our market. So and we need to be aware of them.
I say that because when Grant Patterson, the chief executive, was sitting in the chair you're occupying now, when he first came back from America, he said we're about 5 years behind. This time he says we're about 15 years behind, which would suggest that he's got a lot of improving to do. So your competitors are going to get smarter. How do you actually shield yourself against that?
We've certainly had over the years also built up our own core competencies and things that we're good at. And we're good at focusing on our business. We've got a core business and we don't get distracted into lots of other things. And for us, it's now honing that strategy, making sure that we stick to what we do well. But also, the board has approved that we look at 1 or 2 alternative models to enter into markets that we haven't been able to go into. So we are working on those, and hopefully that will give us the edge that we need to stay ahead of the game.
You mentioned unsecured lending. How did that impact you?
I think it's very difficult to say about how much we benefited from it, but the unsecured lending was definitely, we benefited from it in terms of...
So it went crazy last year?
Yeah, and we had, people had cash in their pockets and they spent it at all retailers for that matter, and Cashbuild certainly got there, but this year we can see our own internal credit through Nedbank is down. You can see the lending rates, the applications are much higher because everybody's indebted and they're looking for credit, but the grant rates or the approval rates are down. So, and overall the loans extended are down, and therefore you can see there's a crunch on the consumers and they don't have that much disposable income.
But it's an interesting point. What percentage of your turnover, being Cashbuild, people come in with cash, would have been funded by unsecured lending?
That's a difficult question that we
don't.
I think it's very difficult for me to say. It could be our own internal one is about 5% that we grant on credit. When I see people walking into the stores, probably 10-15% could have been by unsecured lending.
At the margin, very significant.
Yeah.
Werner de Jager, let's hope next time we've got better news. Look
Thanks,
forward
Alex.
to seeing you again, the Chief Executive of Cashbuild.